Well, thank you very much indeed, Caroline Jenga, back there in Broadcasting House. We're coming to you from the trading floor of Nairobi Securities Exchange, and of course we'll be focusing on how the market has reacted. Of course, it has been a very volatile week for the market and of course for many investors. Well, good evening. Thank you very much indeed for joining us. We'll also be talking to Thapelo Tsheole. He's the CEO of Botswana Stocks Exchange, and he'll be explaining to us what they are doing down there to help the market or grow. And of course, we'll also be looking at how the figures are looking like at the NSE. I'll be joined by Edwin Tsheole. He's a senior market analyst at Dyer and Blair. But for now, let's talk to Thapelo. Thapelo.
Hi.
Thank you very much.
Thank you very much.
Let's take position. So, I basically want to find out from you, since 1989 that the KBC Stock Exchange has been in operation. The last 2 years has been very tough indeed for the market. Would you say that these are the worst time for the market?
Yeah, I think for us as Botswana Stock Exchange, we haven't actually experienced a lot of tough markets in terms of our activities. Yes, of course, trading was a little bit down, but in terms of listings, in terms of increasing the number of investors, and in terms of even profitability of the exchange, it was not really a tough year because of our market initiatives.
And your market is still heavily dominated, by foreign investors and more so South African companies. Do you have deliberate efforts to try and turn the tables towards focusing more on domestic investors?
Yeah, I think in terms of investment, majority of investors are Botswana-based companies, followed by more of US funds. I think South Africans come 5th or 7th compared to other markets. But when you look at companies, majority of the companies that are listed in the market, I think are Botswana headquartered companies. But of course, we have got some British, Canadian, Australian companies listed in Botswana market. But if you look at the companies that are local, I think they make almost close to half of the companies listed on the stock market.
Is this a comfortable position to be?
Yeah, I think it's a comfortable position to be. I mean, number one, we operate a very liberal economy. And the ease of doing business in Botswana and the environment of doing business in Botswana is very much accommodative. And therefore, given the small size of the economy, which is largely dominated by the mining sector, I think it's not relatively bad to have the structure of the market which we have. But of course, like any other market, the market evolves. The dynamics and the ecosystem of the market will evolve over time. That is where our market development initiatives are geared towards.
And when you look at the NSE, Nairobi Securities Exchange, where you have close to 70% of all market players or investors, being foreign, are there lessons that you think NSE can learn from GSE?
From BSE?
Yeah.
Yeah, I think one of the lessons that they can learn maybe from us is that, I mean, the structures of our economies are maybe pretty much the same. I think Kenya have been able to attract a lot of multinational companies, which is the same as Botswana. But I think what we managed to also do is that we managed to get these foreign companies to list in our market. Because when companies do business in your country, they get profits from your country, they get revenue from your country. But the way you can economically empower a lot of citizens in that particular country is to get them to buy shares in these companies. And when these companies are listed in the stock exchange, by citizens buying shares into them, they're able to get a share in the GDP or in the economy of the country, and thereby you are indirectly achieving citizen economic empowerment.
And when you look at the African markets, from Cairo to Johannesburg to Lagos to Nairobi, it has been a bearish trend, in the last 2 years. And of course, we have seen the NSE, the Nairobi Securities Exchange, losing a significant portion of its market cap. This bearish trend that the African markets have been into, how do you think in the future we can avoid such a situation?
Yeah, I think one of the primary rule of the exchange is not necessarily to pop up returns or prices, but what I think have been the underlying economic fundamentals concerning the bearish status of the market in terms of not giving up the returns, the index not going up, is because I think generally the global economy is very slow. I mean, growth is very slow across the world. And I think one of the things that needs to happen is that, I mean, the economies in Africa needs to do a lot in terms of increasing the value chain of the services. I know in Botswana is the diamond industry. We need to work very hard to bring the value chain to Botswana. In Kenya, I think is the coffee industry. You export a lot of raw, maybe beans. Coffee is done somewhere else.
Mm-hmm.
So, but if you can work in as much as bring in the value chain
Mm-hmm.
to add a lot of value in African economies before we export these raw materials, this is something that is likely to energize the domestic economy,
Mm-hmm.
and also it will trickle down to other sectors because a lot of listed companies are linked to the general economy.
Mm-hmm.
So I think it's much more of the structure of the economy that needs to change a bit
Mm-hmm.
than the role of stock exchanges
Mm-hmm.
themselves.
Mm-hmm. You're talking about value addition, and we have seen in the last 1 year a lot of foreign investors, are fleeing to what they consider to be safe havens, and this is the U.S., where the yields, have somehow spiked. How then do we encourage Africans or domestic investors to invest in their own markets?
Yeah, I think it's an issue of innovation. We need to make markets in Africa very accessible. I'll give you a typical example in Botswana. When the government privatized its first entity last year,
Mm-hmm.
the number of investors, local investors, moved from 28,000 to about 78,000 local Botswana,
Mm-hmm.
which I think is a good thing. I know in Kenya you guys have just launched a mobile bond.
Yeah.
That is the type of innovation that is needed
Mm-hmm.
to give locals access to the market. It's an issue of access to the market, but also an issue of educating the local population, because unfortunately the structure of the education system in African markets, in African economies or African countries, does not inculcate an aspect of financial literacy among its populace.
Mm-hmm.
So this role, I think, stock exchanges need to play in terms of educating their people about the stock markets.
Mm-hmm. And before your government, privatized the BTE, Botswana Telecommunication Corporation,
Yeah.
BTC, there was a lot of skepticism as to whether these are good stock to buy.
Yeah.
But of course, I think with time it has been proven to be. Is this a pointer that African government should actually divest from managing and running companies and allow the public to own a piece of these companies?
Yeah, I strongly, firmly believe in the role of the private sector, free market economy, because I mean African governments are inefficient. Majority of them, if not nearly all of them, are very corrupt, and therefore it is far much better to leave the efficiency to the market, and for the government to divest from majority of the services that it's actually running. I mean, in Botswana, BTCL, there were a lot of stories about it, but now I think it's the stocks that have done well since year to date.
Mm-hmm.
And I hear even in Kenya here, Safaricom was actually originally a government company. They divested. Look at where it is now. I think it's an efficiently run company.
Yeah.
I think the governments should bit by bit or slowly take away out of some of these entities and list them in the stock market, because that is to me the most efficient way of empowering the local citizens,
Mhm.
and also the most efficient way of allocating resources by listing companies on the stock market.
Mhm.
But of course, the general populace that doesn't have money will still be left out. But at least it's citizen economic empowerment to some extent.
Mhm. And we are talking about corruption, and we know that corruption is an ongoing concern, not only here in Kenya, but in many parts of the world. And when we talk about corruption and the markets, and we know for sure that, for example, here in Kenya in the past, we have seen a number of stockbrokers, being placed under receivership, for insider trading. I know this is not so prevalent in the market, but I can't remember whether it was last month, but one, whereby you suspended one of the stockbrokers.
Yeah.
How have you managed to deal with the issues of insider trading and information asymmetry?
Yeah, I think regular broker inspections also help. I think spot checks in terms of who are doing the trades, how are the prices moving in terms of spikes in individual stocks, also help these particular issues. And also the general management of the stockbroking companies also help, because even in our case, this particular stockbroking was not conforming to some level of governance. So we had to move in as regulators. And also the general cooperation between the stock exchange and the Capital Markets Authority. It's one of the most fundamental things that need to be in place. And in Botswana, we meet regularly with the regulator of the Capital Markets Authority to discuss issues of mutual concern, because with financial markets, when things go bad, recovery will be a very long road.
And talking about discipline in the market, we know for sure that it's about 5% of Africans who participate in market activities, and part of this has been impacted negatively by the fact that some market players have misbehaved in the past, killing the morale and the spirit of many Africans. So how do we ensure that we pull more Africans into the African markets?
Yeah, I think like I said, tighter regulation in terms of brokers, brokerage firms need to be put in place. Number one, they need to be surety in terms of investor protection, in terms of how are investors going to be protected against these rogue brokers. And also at the company levels that are listed in the stock market, they need to be increased disclosure in terms of information to the market, which is very timely, and technology helps in this regard. News services in stock exchanges must be a very important thing. And also I think it's one thing that we also did in Botswana, financial reporting by journalists. You need to provide free continuous education to financial journalists, because they also help to let the message to get to the general populace. And also the role of investors. We normally hold open days in Botswana across the countries to teach investors about why they should invest, what are their rights, which is something that is very important to assure them, to bring confidence and integrity into the market.
And finally, because we have to wrap it up, where do you see the African markets in the next 10 years? And how do we deepen financial or market inclusion across the board?
I think the markets in Africa are developing, and they are developing very fast, mainly because it's viewed as the next investment destination. And also because most markets in Africa are relatively offering better returns historically in the last 5 years or so than developed countries' markets. And also I think Africa now is a better place than it was 10 years or so ago. So it's much more attractive to that. So I think regional integration is taking a big agenda issue in the African markets, and this integration brings with it harmonization of trading rules, harmonization of listing rules, and this harmonization is taking into place some best practices also from developed market. So I think in the next few years, we are going to see the African markets, majority of them, evolving and developing from where they are.
Good.
Yeah.
Thapelo, thank you very much indeed for joining us here.
Thank you very much for hosting
Thanks
me.
indeed.
Thanks.
Thapelo Tsheole, Chief Executive Officer of Botswana Stock Exchange, joining us here on the Trading Bell to help us understand the role of African markets in economic growth. Well, you're watching the Trading Bell. We take a short break and thereafter we'll continue. Stay right here. Well, quite a volatile week here for the market. Edwin Tsheole is a market analyst at Diane Blair, joining us here. Thank you very much indeed, Edwin. I mean, we've been with you throughout the week. We've been seeing how the figures, they have been oscillating. When you look back at where we are coming from and where we are now, what conclusions do you draw?
Number one, the market has definitely improved. Number two, there is still an element of fear because we still do not have clarity on what we can expect. As we speak, we still do not know when the election date will be. Or at least we do not know whether the two main sides are willing to agree on that date. We also do not know the composition of the key personnel that will conduct the election. And so in a market that, as we've mentioned before, that is 60% dominated by foreign investors, that definitely has an element of risk, and that's why we've seen a bit of a sell-off. But it's also important to highlight that unlike in other instances before, we are actually seeing local institutional investors coming to the market. There's a bit of a pent-up demand that is right there. If Safaricom goes to 25 bob, you're going to see a lot of trades moving. So it's not really an indictment of macroeconomics or other fundamental issues. It's just, the politics. And we just have to wait and see how it plays out.
Yep. And of course, in many months, we have seen, for the first time in many months, we have seen the NSE 20 share index, dropping below the 4,000 psychological mark. And so far, it has lost about 5.51% of its value. The question is, have we seen the worst yet, or are we out of the woodwork yet?
O'Brien, we've been at a worse position than this, actually just, around March, February this year. So this is not that bad. But I cannot say whether we've seen the worst yet. All I'm sure is that we are going to continue seeing an element of volatility, but we are not going to be completely in the red. The market is rearing to go up. It's only that now there's this sort of a blockage that has come in courtesy of politics. But then again, if you actually think about it on the flip side, this is a testament to independence of our judiciary. It is a testament to maturity of our democracy. So down the road, there should be a correction that should be positive. So if I'm an analyst, I'm making this conclusion that the market is supposed to go up after election, I would argue that it's even going to go up higher after we actually get to conclude this issue. Yep.
So, and you're talking about domestic investors. We know for sure they form about 30% of all the total investors on the market. Can they sustain the market momentum going forward?
It's a fair question, but we have to put it into context. And the context here is that local institutional investors, not retail, institutional investors have not actually been going into the market for a while now because, the market was not offering them significant upside. But then now also we have a situation where they're not eager to go into government securities as much because that's where everybody else is going. So the pie is kind of shrinking. And then now there's the expectation, as we've seen in the past, that market actually goes up after a peaceful election. So we do expect that we can be able to hold this maybe for a couple more months. But then now in the long term, fund managers in foreign markets have to make a decision of whether to go into Kenya versus other competing African economies like Nigeria, South Africa, and Ghana to an extent. And the case for Kenya still seems quite stronger. There are structural and political issues in all those other countries that seem even worse than our case. So if you're seated somewhere in London, in South Africa, trying to make an allocation, then you are very much likely to bring it here than in those other countries.
Very well. And finally, I want to find out from you which are the counters to watch. And for investors, is this a time to sell or to buy?
For investors who are already in the market, this is a time to take some profit. Maybe put some of the money they have in cash or fixed income as they wait for a turnaround. For investors who are not in the market, who are also comfortable with a long-term horizon, this is a time to go into the market. Yeah, but there is those two contingencies: a long-term horizon, and also a willingness to absorb that level of risk.
Very well.
Yep.
Edwin, asante sana for joining us here. Edwin Tsheole is a research analyst at Dye & Blair, joining us here to help us understand the direction that the market is taking. Well, you're watching the Trading Bell. You don't need to go anywhere. Stay right here.
My name is Beryl. How will I find related information concerning stocks?
Barry, you can get information on stocks and any other investments on NSC websites. That is www.nsc.co.ke, or you can visit any stockbroker or investment bank for more information.
Well, and that's all for today. Many thanks indeed for your company. We look forward for the same next Thursday, same time, right here on KBC Channel 1. My name is O'Brien Kimani. On behalf of the entire Trading Bell TV crew, we wish you a good night. But of course, remember to get in touch with us. Our SMS line is 22162. Always start with the word biz. And of course, our Facebook page is Trading Bell TV Show. At O'Brien Kimani is my Twitter handle, at Trading Bell. And of course, we'll get in touch with you and we'll appreciate your feedback. We'll see you again on Thursday. Good night.